Okay, boys and girls, we are back. This little thing right here is the controls for the meeting. This thing I'm pointing at right here, and it disappears. And in the last update, it's allowed to disappear completely, which is just nonsense. It doesn't even qualify as nonsense. That's just utter stupidity in software design. So I had to jury rig it to make it work. I'm going to give a couple minutes for everyone to get back here after all that hoo-ha. Unfortunately, we missed a couple of things that I had planned to show you. The news at 5:30, which just happened, was a big part of our session today, which sucks. Anyway. I'm still not sure what we're going to do with this. Let's wait till everybody gets in. As a guy who comes from the software world and has actually managed the software development process a couple of hundred times, it just never ceases to amaze me when software companies are so incredibly stupid. Push out an update that just crashes everything in order to put on a new GUI that, if I showed it to you, it's pathetic. It's designed to be used with touch is what it's about. A lot of software companies are doing this. Big giant buttons and making only two things on the screen at once. So in a browser, it looks pretty crazy, but on a touchscreen, it looks right. Well, anyway, that's what they apparently were doing, and in the process, totally borked the interface when you're running multiple monitors. So I'm running it in a little tiny machine separately, and hopefully it will continue to work. Okay, there's 14 people here. Again, I'll give it a few more minutes till everybody rolls back in. I know there was some trouble getting back into the room. What a stupid piece of software. I have looked at a couple of other ones, live something, but I did not expect to have problems like this, so I haven't really looked at them in depth. All right, let's see, who's back? We have 14. Well, let me give it another minute or two. So let's see, the chat is still not up. Hang on a second, guys. I can't see if you're saying anything. I can't even tell if you can hear me. Let's see, where did chat go? Of course, that disappeared too. Lovely. Okay, there's chat, finally. All right, I think I can read you guys now. The issue is that they put a GUI update on it. Yeah, I had to reinstall Zoom. That was part of it. And I'm also running it in a little partition by itself, so it can't interfere with anything. But, that's just such bullshit when you have an online meeting software company and you push an update out and it just borks everything. So what did they do? Instead of rolling the update back, they pushed out another update, which made it worse. So what I did was made a little tiny virtual machine. It's running in there and it's trying to share all the memory I've got here. It seems to be working. I don't know if we're going to be able to trade with it. For the weekend, I can probably find a better workaround. Okay, well, 15 people. Looks like this is all we're going to get for now. Hopefully everyone else gets the message that we are here. There's Dr. Shah. Okay, there was a couple of others that were here before that are not back yet. I'm gonna email everybody real quick, guys. Just hang on a second here. I allocated a bunch of time to this session, but not for this. So let's just see. Yeah, I've got a bunch of emails from people wondering what was going on. Okay, hang on one second. What really frustrates me about this is, can you imagine, somebody that doesn't have technical skills dealing with this nonsense? I mean, I do, and it still took me close to 35 minutes to fix it and, start it over. Unreal. Okay, please join meeting. We fixed it. Okay, let me send the link one more time and then we'll start. Sorry guys, I'm just trying to let everybody know what's going on, which is hard with all this BS. Okay, meetings, where's the link for this one? There it is. Okay. One more second, guys. Okay. All right, y'all should be getting an email now. Just okay. All right, now we shall start. Well, oh, what fun. Okay, let's see. I do seem to be, yeah, you guys can hear me. Good. We got it. All right, 17 are here. All right, that's pretty much where we were before all the fun started. Okay, if you're just rejoining us, what happened? Zoom pushed out an update that broke everything. Then they pushed out an update to fix that broke all the workarounds to the previous update. Classic poor software company management, and particularly a really big one. It's mind-boggling that they could be that bad at what they do, but that's the case. All right, this meeting ostensibly is about trading the open and the first hour high and low and the range again, but because of this starting 40 minutes late and it took a lot of wind out of me doing that. So I'm gonna call an audible here and we're gonna do something slightly different. We are going to talk about those setups and those topics, but I'm not going to do it in the manner that I had planned because I'm just not going to have time. And it's not going to make any sense to you guys if I try to rush it. So here's what we're going to do. First of all, I want to talk about a couple things that that I've read in your comments and whatnot. So these are not germane to the range or the open or the first hour high and low. They're just general stuff that is really helpful to know. By the way, this is crazy price action we're seeing right now. If you guys, one of the things I wanted to mention, I don't know if I'm going to be able to do my screen switching here, but let's try it since we do seem to have it working. Let's see if I can real quickly switch over to that one, and that should work. Okay, you guys should be seeing the one which now has 2, 4, 6, 8, 10. Used to have a few less than that. Okay, cool. First of all, I just wanted to explain why I made this change, and this is part of just adapting your process constantly. And some of you may have guessed this, but basically what happened was volatility just suddenly overnight increased radically on Sunday. And I'm going to talk more about that Sunday night trade in just a second. But this is also germane to the question a lot of you bring up. Steve Weber's one of them. I brought it up over and over. It's really hard to transition between, by the way, you don't want to be trading this stuff right now. This is really active price discovery and a lot of shorts covering here because they don't understand this action, and I wouldn't either. So if you're trading this, I would suggest high momentum setup or nothing else, and you're going to get stopped out. So you might just want to go to the sidelines for a few minutes. We'll talk more about that. Anyway, so one of the things that, that happened, we got this huge drop back here. And, I'm pointing to the ES down here, but, we had these 2 days of huge drops. I don't know if you can see where my mouse is. I'll move it a lot. Okay. And one of the things that I wanted you to be mindful of there, I'm going to switch back to the main screen here so I can share this. And I wanted you to be mindful of a couple of things there that some of you know and some of you don't know, but it's good stuff to know. So let's grab ES just for the record here. Okay, you guys are back on my main screen with the domes, right? Anybody? Yes, no? Yes, okay, thank you. Trader PD is right on top of things. All right, so this is the range view from last week, or earlier this week rather, when we had this big drop, Sunday night. And when that happens, it becomes important to be able to see that as you're playing the order flow, in my experience. So, and not only that one, but also the same idea holds for the Renko, because when we did that drop, we entered into a fib area that is very important. And I mentioned I don't really use fibs, but this is something I watch a lot because it's a really good gauge of the overall market. So what I'm going to do here real quick is just put fib retracements on here from the high to the low of this range. And notice where we are. Okay, I posted yesterday we were in the ambush area, which most people would consider to be 50 to 61% of a retracement. Some people call it 38 to 61, whatever. Anyway, we are out of it now, which is extraordinarily bullish if we can stay up here. That means we'll probably bust new highs again. But when we were in here, it's a really crazy area that tends to cause a lot of volatility. So for that reason, I wasn't feeling well. And again, this is just really good, process training for all of you. I went back and did what I suggest you all do. Whenever something isn't the way I want it to be, I kind of go back and question my assumptions. So this is what was happening Sunday night, and I'm going to explain all this in just a minute in more detail about what happened, but I just want to show you this one too. And to basically you just plot the high to the low of a big drop, and then you look at the retracements of that. And as I said, the area that is generally called the ambush, or the area where people get caught because they think it's going back up and it tends to turn down, is right in here, this area of 50 to 61%. And you can see that's exactly what it did on the first test. And now the fact that we're above that is significant. So anyway, the reason I'm telling you all this is a couple of fold. One, explaining moving to these 10 charts up. One of the things that I've said a couple times in this session, I'm going to switch back over there for a second, is that I had just started doing the portrait style monitors when I started this workshop. And one of the things I always like to do, and I really want you guys to hear this because this is really important, is a fib, but I'll answer that in a minute. And post questions if you have them, guys. Anyway, to the extent you can make it so that you don't have to dick around with your platform. In other words, change nothing, that is desirable. And a lot of times, I'll talk about, like, I might change the size on my reconstructed tapes or whatever. Minor things like that, I haven't done those in like 6 months, and I used to do them all the time. And so I started, looking back at my journal notes and thinking, a lot of this comes back to that, can I get the whole picture fast enough concept? And if you recall, these two charts, the Rinkos and the ranges, were behind my tick chart before, with the thinking that, well, once I understand the context, I really don't need to see them anymore. And that's generally true, except that's not true when we have these giant volatile ranges, because then that context becomes important real time. For example, yesterday, as we bounced up, if you were looking at a Renko chart, you would have seen, and I'll just kind of point to it over here. I think I'm back over on this one, aren't I? Yes, I am. So you could see, because it draws a straight line across the price, that I can see other areas where it consolidated, and it was lower down, obviously. We were trading down between 20 and like 14, and that's a huge price consolidation area. And on the range chart, what we saw there was when it hit it, it just blew through it on a lot of volume, and it did the same thing over here on the ES. So I found a way that kind of works visually, and that's why I put this back to having everything up at once. And it also helps with that. I hope Steve is here. Yes, he is. Okay, that idea of transitioning from scalping to the weight setups. By having this there, it kind of jolts your brain back into context. So if I'm looking at these screens right now, let me just, again, I know you guys a lot like to hear just like, what's my thinking process? So it goes from the bottom up here is basically what you're doing. And right now you can see we are not on the range charts. We are not anywhere. We're in the middle of the middle on all these ranges. And that wasn't the case before when we were down lower earlier in the week when we were trading around, 31.10 in the ES. Again, you can see that's a huge consolidation area and a lot of, first hour lows and first hour highs, which is a topic hopefully we'll get back to today. And so you kind of start there and the context kind of builds, and then the trend, you know, last week I mentioned a couple times when we looked at the Renko, well, it's really hard to argue that we don't have an uptrend. Yeah, that just changed. Sunday night, that changed to, whoa, look at that. We took out a lot of support levels, and then lo and behold, we blew right back up to near the highs. What should this tell you, guys? Anybody want to take a wild guess in the chat? This kind of price behavior, what should you be thinking? I want to see how many of you have been around more than one market cycle. Lee will probably know this answer, but anybody take a shot at it. Put it in the chat, and then I'm going to come back and answer the fib question that Jerry asked. Anyone have an idea? There's 21 of you now. Price discovery upwards. Price discovery. Yes and no. It is price discovery. That would be a really good way to describe the action we saw since the 5:30 economic announcements, which I didn't even see what they were, but we bumped up. So yeah, and the perverse logic of the market, payroll reports that were blowouts popped us up, but guess what? That might become a real negative shortly, as everyone says, well, there's no room for growth, or you know, whatever nonsense they will do, or there's not going to be a rate cut now. So you know, you can see there's probably some good opportunities to short this. I don't know if I want to do that while I'm talking, but it sure looks tempting. If you look over here. Anyway, all right, so who answered that question? Price discovery, solid uptrend. I'm looking at all the answers here. Banker pushing up. No, God, nobody got it. I'm shocked. Really? What's the question again? Some or have more coffee. Okay, the question is, when I see this kind of price action where we thought we had a really strong trend, that trend is more than taken out in one session, and then we recover right back up into the trend, but we have yet to continue it. That's what I'm describing. What would that tell you? Forget the who's doing what. This has nothing to do with market participants. This has to do with price action. Those of you that were on the question of, ooh, okay, we're getting closer, we're getting closer, we're getting closer. Okay. Those of you that were saying price discovery, and those of you that are now saying, all right, Pavel, you're trying to predict the future. Those of you you're on the right track, but and Lee's getting close. But again, what this tells you is that participants do not have convictions. That's what it tells you. And I'm going to stop right here and ask any one of you to tell me an argument that proves what I just said false. Okay, this is what you do in the market. You don't try to, you know, the conventional wisdom isn't, and gurus will just tell you something that might work in one set of circumstances. I'm telling you something that works all the time. What is the human emotional energy that you are seeing in the markets right now? And again, Pavel, don't try to predict what's going to happen as a result of it. Michael Lee, it's taking profits. No, that might be what they do. Okay, Lee is saying fear. David is saying greed. Darren is saying confusion. We are getting closer. Nobody has any idea what's going on. Caution, not really. Caution would mean that they would be selling right here really hard. And I don't know, are you seeing that? I'm not. I'm seeing some guys taking profits on that pop maybe, but okay, so here's the answer to the question I'm asking you. We are pushing into all-time highs and volatility is increasing, and nobody, yeah, don't worry about up thrusts and chart setups. Those of you that are saying that. And again, the concept of value doesn't necessarily make sense. The market is in price discovery in the sense that people are trying to figure out value up here. But the reality is, and you know, let's switch back here. Hang on one second. I'm going to go back to my main screen, and that's where we want to be. Okay. Now let's look at this again. The NASDAQ was actually the most technical about this. Okay, so take a look at this chart. We're God, everything disappeared again. Hold on, chat. Where did you hide? Chat. Okay, cool. Lack of thrust. Okay, not wrong, Lee. All of those of you that are using terms all along through here, it's not that you're wrong. Price discovery upwards, washout, all that stuff. Those are all the things that could happen, but that's not the point I'm making. Yes, Lee, the last thing you said is exactly the right point. Nobody has a fucking clue what's going on or how to trust the price action. That is very, very consistent with what are typically referred to, and I'm not predicting it's going to happen, but it sure feels like it, a blow off top. So the right thing to be doing here, Lee, is exactly sit on your hands and wait for the setups, because when they come, they're going to be just ridiculously sweet. And I'm going to tell you a story about Sunday night where Jeff had 15 short at the high of the day, high of the night, but had to go to bed because he was feeling crappy. And I mean, I literally shut down a trade that probably would have made six figures if I had kept it on. So no shoulda, coulda, woulda, but that's the kind of stuff that happens in these conditions. So let's go back to this and let's talk about what happened. Okay, I'm going to push this over so we can see as it happened. Okay, so Sunday night, right? We're up here. And what happened? Well, that happened. And it started to happen at night, right? And then we opened, and I mean, we can go look at the 5-minute and whatnot to get a better idea of this, but you don't need to. All you have to 15 micros. I'm not sure what 15 micros means. Oh, no, that was 15 NQs, full size, short. And I literally caught the top. I mean, I was short at like 50, God, I want to say it was like 53. And, but when you have a back injury, you have to rest. And I did, I had to sleep, and I just won't leave a position like that on. So it shoulda, coulda, woulda. Anyway, okay, so here's what happened. So this is the overnight session right in here, okay? And you can see we're testing the lows, and it had a lot of energy if you were watching Sunday night. You know, it wasn't really clear what was going on, but there was a lot of action. And then this happened, okay? So this is really clear what that was about. It took out that support level. And when it did, everyone just said, well, fuck, sell, short, get, you know, everyone ran for cover when we took that out. So that's a really good example of where support isn't a support. And that's why we call it an inflection point, because the second it broke that, and by the way, look where it broke it. We're going to segue into the first hour high and low discussion. It broke it right on the first hour low. It was right there. And it just blew, excuse me, that was the first hour high, and it just took it out. And then here's the low, okay? This was the first hour of Monday, okay? And look where that formed. It formed right on the top of a previous level of support, quote unquote. Again, we're gonna call that inflection because that's a better term. And it had blown through this one, but it had kind of grabbed this. And look at the volume profile there. You can see it tested that, you know, but then, you know, ultimately the sellers won here is what happened. Okay. Now look what happened next. Okay. This is where the fun starts. The first hour high got sold, or first hour low got sold. Okay. And so the top of this area is no longer in play. That support, quote unquote, went away. So now look at all this down here. You've got this giant consolidation. And again, you've seen me over and over say, you know, you really got to watch those, because those are the places where other traders are going to be looking. And again, you know, I don't use pivots. I don't use moving averages. I don't use fibs. But remember, I had a fib on here, and let's put it back just so we can see. And I said to myself, okay, we've got this massive drop. So at any point here, you could have done what I did. You could have put it to here and looked for bounces, or you could have put it down to here and looked for bounces. And so if you kind of do that just for fun, okay. And now let's see what happens. Okay. Remember, this is the area that typically is that area between, I like it to be 50 or 61, but anywhere between 38 and 61% in fibs is typically this area that, quote unquote, gets ambushed. Watch what happens here, guys. Boom. It couldn't even get there, but it did manage to get above that area that it had been testing and kind of get back into this one. And then what happened? The sellers just said, no, thank you. And again, this is overnight again, right? And look what happened. It blew all the way down. It took that level out. It took that level out. It's all the way back here on this, which goes all the way back to, you know, the 6th. So it's a good month ago, right? And then watch what happens. Okay, we take all that out. Whenever you see this kind of action, that's consolidation. There's the high of the next day. There's the first hour low of the next day. This is really significant here. Remember what I said about this one. It held it, it tried to bounce, it tested the beginning of that ambush area, and then it just got crushed. So, if you were watching this, you just get in there with everything you got, which was my mentality up here, putting 15 on short. But when you do those kind of trades, you got to be able to stay up all night to play them too, which normally I can do, but when my back's out, it's hard. So anyway, so what happened next? Okay, so look at this, just kind of scroll along here and watch what happened with that first hour low and first hour high. So, okay, the first hour high was established there, then the low. We've got a really nice symmetrical range here, some stuff up here which is not directly related yet, because remember, that's the whole day. And now that's filling in because it came up there after that. And watch what happened. Okay, look at that spot right there. Now remember, this is overnight, guys, but look where the first hour high was. And also that happens to be the bottom of the consolidation area. So again, this is going toward a theme I'm gonna talk about over and over and over again, is that my setups are not 8 different discrete setups. They all are constantly weaving together. So we're looking at a whole lot of things going on here. We're looking at it in the context of the first hour high and low. But there were some other things here too. Remember I talked about flips being really radical moves? We had one right there. It attempted to bounce and it just got crushed right on the open. That was a flip. That was a perfect example. And I don't want to spend too much time on the flip setup, other than when you get one, you'll know it. It just will just completely fall apart like that. And the trick is just to get in there with as much size as you can afford to manage. And that's really all there is to it. So anyway, let's get back to here. So look what's going on. That held, and it held a couple times overnight. We got some decent bounces. Look at this, okay? This is why overnights can be so significant. The volume's lower, and whoever wants to can move the price, and they were successful at doing that. Look where it ended up, right back in there, bottom of that ambush area again. No trade set up there, but again, you notice the inflection area. It took a bounce down from there, as they generally will do. There's a little wiggle, consolidation again. Pete likes to call that the 8-tick wiggle, which is 2 points. It does that, although in NQ it's a little bigger. But if that was ES, that typically is what it would do. And then look what happens next. First hour low, first hour high. Just so happens that's containing this wiggling consolidation area, isn't it? So it's kind of defining it for us, like it did with this one. And now watch what happens. Broke the top of it right there, which happens to be the very bottom of that ambush area. So what does that mean? That just means people tend to make the wrong decisions here. The guy who's looking at this as a trend move reshorted right there, which is exactly why he gets fucked, because it's a perfect fuck the guy who reshorted setup. There's just no other way to describe it. A friend of mine actually calls it that. He trades fibs and he loves the ambush zone because trend traders just routinely get screwed there, and you'll see it happen in about 2 seconds. Okay, so here's the open, first hour high and low of the following day, and so now we're into the week. Okay, so and look what happened. This was the area that consolidated. It tested it again. It tested it again, and look what happened when it broke out. Okay, it's right there. That's the spot where all the trend traders are thinking, okay, that's a great reshort. Guess what? Order flow told you the exact opposite. You get long because you've got no risk. It pulls back, your long didn't work. But boy, if it can blow out of here and get up into that ambush zone or potentially retest the high, what will it look like? It'll look like that. And so that's exactly what happened. And so now this whole ambush thing is kind of off. I mean, we're still in the area, but that was a really strong move. So it's a fun time to be trading the open, which we're going to have in a few minutes. Let me get rid of my drawing objects, and then I want to cover a couple other things, and then I'll take questions if we have any. So let's put that back. And okay, let's see what's going on here. Nothing really. All right. One other thing, I closed everything I normally keep running down because of that Zoom problem. So give me a second to get Thinkorswim up, because those equivolume charts will be useful on a day like this with all this big movement. Okay. All right, let's go back to, give me a second to bring that up. All right, so there were some questions here. Fib levels valid on all time frames or just the larger time frames is what Jerry asked me a way back. And the answer to that one, for the purposes of the way I showed them to you, you want to use the really long time frames. You know, intraday, I know people that use them, but I think again, you know, when they work, it's a self-fulfilling prophecy. I think you're better off just watching order flow intraday. You know, volume pretty much tells you the story intraday all the time, as long as you're watching it, you know. For example, right now, okay, let's take a look at our 30-second chart. You know, we had that big move up on the news at 5:30, and what does this chart tell you right now? Huge volume, small volume, huge volume, small volume, huge volume, small volume, maybe an up thrust, but it's right before the open. I generally won't play anything like that right before the open. So what is this telling you? There's a whole lot of trap shorts. That's what it's telling you. I mean, they just got reamed by this. Now, is that going to embolden them to short this again? Or I don't know. You know, the beauty of blow off top volatility, which is the thing we're seeing, that was the answer I was looking for before. I don't know that we're going to get off blow off top, but that was the kind of price discovery we were seeing. And that's what this is what it looks like. And so, you know, it wouldn't be out of the question at all to expect some really crazy stuff to happen. So it's kind of a way to train yourself to think that way. So let's look at this. Okay, this is the NQ Renko. 8450 is the area that reversed and was the high. It's a ledge, guys. They always are. All-time highs are always ledges. This is a really weird pattern. You know, forget any, you know, head and shoulders or any of that crap. I don't use any of that. But this pattern right now is really bullish. It either gets rejected really hard right here, or I would expect it to retest. And I think it'll be really volatile along the way. So we could have some great trading. Let me go back and show you Sunday just for fun. I think I can show it on the 5-minute if I have enough data here. Let's see. Oh, I'm still not 100% on my brain. So Sunday was the first. Okay. Oh, this doesn't go back that far. I need another day. Okay. Okay. Okay, yeah, there it is. Okay, so that was the overnight on Sunday, and I was short right in here somewhere, 15 NQs, and oh man, shoulda, coulda, woulda. Anyway, look at the on a 5-minute chart. I mean, look at these bars. You know, this is not tradable action for any kind of technical analysis. Anybody that's telling you that their trend trading system is catching this is full of shit. Those of you that were watching, there was some conversation about oil yesterday, a couple of days ago. I don't know if you guys saw the oil. There was a 5-minute bar that was just absurd. Yeah, here we are. Just crazy stuff. I mean, this is literally $1,000 bar in oil. Yeah, because oil's $1,000 a full point per contract. So, so there's all kinds of craziness going on, and you know, in my opinion, the only way to really trade this is order flow, and just go with the action, whichever way it's going. So, that's really the moral of all the stories here. Now, let's get back to the setups a little bit, and I see some questions, so let's see what we can do with those. Yeah, you know, David said something back here about the market structure. And, you know, if you just look at the overall structure and the volume, you know, which is pretty much what I was doing here with the Renkos, yeah, it's really hard to argue anything but a bullish case, particularly with this reversal here. But until I see how it handles that high, you know, I don't know if I'd assume that. What I would assume here is that if we do get up there, it will be like a tug of war for a while, and you'll probably have a chance to get in a position or two both ways. But if it does break out of that, you could look at it to just go crazy up. I mean, there's just nothing to hold it back if it does that. And there's a lot of money on the sidelines looking for something to do right now, which is, you know, there's such wealth disparity, it's causing that. Okay, let me get back to my notes here real quick before we get to the open. I want to cover a couple of things. what would a blow off top look like? Yeah, no, I know that doesn't translate to other languages real well. Um, Typically, when a market gets to all-time highs and all right, think about the psychology for a second. This is one of those cases where if you think about participants' mindsets, it's a lot easier to understand what's truly going on. The spike on the volume profile through that gap on the Renko is odd. Yeah, no, I know it's really odd. There's a whole bunch of things that are odd about this entire layout. You know, just the charts are not telling any consistent story. I mean, if you looked at this, you'd say, wow, we have a really nice uptrend, you know, get long on pullbacks. Yeah, until this happened, you know, and that just screwed everybody long. And then guess what? You know, we're going right back. So yeah, the only moral of the story, in my opinion, is to trade what's happening immediately and not try to predict the future. However, blow-off tops are cases where you just get really aggressive moves up and down, and you know it's just a crazy event. And many people that are traders now aren't really old enough to have ever even seen one. I'm trying to think about the last time I really saw a real blow-off top. It was probably 1999, 2000, 2001. And, you know, it was just where stuff would just go crazy up. And we've seen some of that for really no reason. You know, they'll say, oh, a Trump tweet, or it'll be the trade, you know, there's going to be a deal with China, whatever it is. But, you know, we'll make all-time highs and then there will just be no participation. And that's kind of what we saw on the last round up there. You know, that's how we had this kind of behavior here. You know, you wouldn't expect that dramatic a pullback from all-time highs. You would have expected it to do something, you know, much more consolidation like. And so you can see the nervousness in the market is what I'm saying. So you know, for example, Trader PD, Pavel, here's how that might play out. You know, what are we at here on the ES 3138? Okay, you know, let's say we clear the highs, and you know, momentum traders will just buy that. They'll throw as much money as they can and try to push it, and everybody will join the party. We could go to 3,500. That's what it could look like. Okay, does that, I mean, you literally could see a 10% move up that reverses on the same day or in the same, you know, couple of days. So yeah, no, David, that's a really good point. Anybody who's been trading less than 20 years isn't experienced because there haven't been any market cycles. Used to be we had cycles every 5 to 7 years. And so a trader with 10, 20 years of experience had been through 2 or 3 cycles. There's these guys that, you know, are running hedge funds that have never been through a cycle because they're 30 and they've been trading since they were 20 and they think they're experienced. You're absolutely right. Those are the guys that will, pardon my French, but I'm going to use a lot of it today. They will be just completely fucked by all-time highs because they will try to buy them. And the trick here will be momentum. So over and over again, you know, there should be certain docisms you're starting to burn into your brain. When all else fails, everybody should know this. Good. Thank you, Pavel, for telling me that. I'm trying to deal with the languages and have that work out. So think about this for a second, guys. You know, a blow off top like that could go 500 points. I mean, easily, but it could also go to 3,300 and then turn and go down to 2,800. I mean, that's the kind of stuff that could happen. So one of the things I see people saying in our chat, and I hear a lot of traders say is, you know, well, it went so far, how could it keep going? You know, it seems like it's got to be running out of gas. And again, no, it doesn't run out of gas till it runs out of gas. And trying to predict that point, you know, I'm going to pick on somebody. Let's see. Is he here? Josh, are you here today? I don't see you. Well, Josh, if you're here, I'm picking on you. You know, Josh told me once in a private chat that, you know, I said, what possible reason did you have to get short there? And he said, well, you know, I was long before and I figured it had to turn sooner or later. I mean, and I'm picking on him, but that's not an uncommon way to think. It's just not accurate. You can't think that way, particularly when the volatility kicks up like this. And, you know, I'm using the term volatility, but I'm not referring to, you know, like VIX volatility. You know, that's kind of the conventional measure, and it's showing, you know, we had a big spike and it went down. So, you know, the conventional people, oh, there's no volatility. Oh yeah, right. You know, we're talking about price volatility. That's what I'm referring to when I say that. Okay, so let's go back and see some more questions. Okay. see on YouTube all the time, people, yeah, okay, we talked about that. Let's see. Yes, that is exactly. You know, if you think of, you know, those YouTube videos where they put Mentos in Coke and then they shake up the bottle and it blows out. That's what a blow off top looks like. So there's lots of videos of Mentos in Coca-Cola. Look for those. Okay, so Amy, Elliott wave theory does account for this price action. Okay, here is something I know people use Elliott wave theory. It's like the king of all nonsense. And I'm not picking on you, Amy, but I've studied Elliott wave pretty thoroughly. And basically, if you look at Elliott wave, there's an explanation for anything. So I'm not picking on you, Amy, but the people that are always doing, well, the wave count is this and that. And I have a very good friend who's made a living for years doing that. But, you know, you get 2 Elliott wave traders in a room and you'll get 4 different wave counts. So, you know, if it predicts for you, great. I do not believe in it and I don't predict price levels, and that's what it attempts to do. So anyway, but everyone will get slaughtered here who is not nimble. That is a true statement. Now, let's go back to a couple of things I wanted to say. First of all, here's a test question for everybody. You should all know this immediately. When you have this kind of action, like we're not right now, but what we saw up until right now, going into the open or not at any time of the day or night, when you see just crazy movement like this, what is the only setup that you can play? Anybody? You know, this should be an automatic answer by now. It's HMOMO, exactly. Or sit on your hands. Yeah, of our setups, it is HMOMO. And you could be playing this right now. You could say, all right, you know, we're at this top, I'm going to sell it. And we'll do that. And the trick is, you know, we want to get a stop between us and where it is right now. You know what, just for fun. I think it's going to go higher when it opens, and I don't like to trade before the open, but I'm going to do it now just to make a point. Let's see what happens here. You could say, well, there's a range forming up here. Yeah, you could try to do that, but the range techniques wouldn't work. So let's make this one into a 2-tick, 1-tick drill. And then let's see what happens over here. I'm just going to kind of let these ride because I'm trying to make a point that, you know, if you tried to trade the range here, because you have a nice little range forming, you have no stop because it's going to blow up through this, odds are. And again, I'm putting this trade on because I really want you to see it fail. Other than trading momentum here, anything you try to do probably won't work. So remember, with momentum, what you're trying to do is get a position on and get a stop between you and your position. And I'm not doing that here. So we're going to get out of that and we'll do the same over here. So I strongly encourage you to have that mentality in this volatility and really manage trades primarily based on the momentum with the idea that your number one objective isn't to lose money. And the reason I'm telling you that is pretty simple. You know, let's just, for argument's sake, say I didn't go to bed and I left this trade on, and this wouldn't have been a hard trade to manage. You know, I might have taken a little bit off there, maybe put some more on as it came down, and, you know, down here it would have been pretty clear that the trade was over. Well, that's my point, is that when you have the momentum, it's pretty easy to get into a trade and just protect yourself, you know, get your stop in between you and your entry. And then, you know, that gives you plenty of time to think about it as it's working. You know, do I add to it? How do I want to play this? Whereas if you try to do that with any of the other setups in this kind of environment, like even just a range up here, just the ebb and flow of it will shake you out. It's just going to be too hard to keep any kind of position on using the logic of the setup in this environment. So I'm going to give you another docism that is a little early, because what we're going to be doing for the next 3 or 4 weeks is primarily consolidating all of these setups into strategies, because too many of you are doing what I was hoping you would do at this point, where you're looking for one setup at a time and you're not seeing how they flow together yet, which I don't expect you to, but I want you to get to that point. So so the point I want you to all remember of that is, wouldn't this be a long, no, see, all right, I see some questions here. Wouldn't this be a long, if you're looking at high Momo on the range charts, best way to gauge it? I'm not gauging it. All of you telling me, saying that stuff, you know, is it long, is it short? You're missing my point. I'm saying there's no trade here, but if I were to enter any sort of trade here, it would only be with HMOMO as the setup. In other words, whichever way it's going, I'm going to put an entry on and I'm going to get a stop between me and the market. I have no other expectations right now. It's just too volatile to try to predict the future beyond that. That's the point I'm making. I'm not trying to gauge it, Jerry. All I'm trying to do is what I was about to say, which is you're all getting to the point now where your entire thesis at any given moment in the market should be this statement. That statement right there. Okay, remember that's in the process. Most of you haven't paid enough attention to it. I'm looking for low risk ideas. Remember that? Developing a low risk idea. That's the key to stalking for a trade, is you've got to be thinking correctly. And right now, a low risk idea is a very, that would be profitable now, and so would that. But the risk is too high. So you have to be constantly thinking about risk. And so that's why HMOMO is the right answer. Because you have no way of predicting this action. I'm sorry, but if anybody, Furu or Elliott Wave or anybody is telling you right now that they can logically tell you what's going to happen next, they are completely and totally full of shit. It's not possible. I'm sorry, I don't care what your algorithm is. I don't care how many years experience you have. I don't care how many MIT math professors you have writing your code. It is not possible. And again, you know, when you hear me say stuff like that, that's just so emphatic, I literally invite any one of you and anyone you know to prove me wrong. Show me a structure for a setup that will work consistently in this environment. There isn't one. I'm sorry. You know, just and I leave that as an open challenge. Bring it. If you know somebody who thinks that they can prove that wrong, bring it to me. Okay, I have never seen it to be true. Yeah, you know, somebody will pull, well, look, here's my short from, you know, Monday, and it worked using my, you know, EMA 9 versus 18 crossover, and I made $75,000. Well, good for you, Mr. Furu. How did that work on Tuesday? Oh, well, that's what you'll hear, because it didn't work on Tuesday. And they probably lost back what they made on Monday. So, HMO most opportunity. I'm reading your question, Bar. No, not necessarily. I mean, Momo changes constantly. So the only thing you're thinking about is getting a good low risk idea, okay? And then as soon as you have one, stalk the low risk idea. So again, up here, you know, look where we are in the 5-minute context. That's a good way to kind of gauge this. What do we have right now going into the open in 10 minutes? We have a double distribution that is radical. In other words, the volume is almost the same on both of the double Ds here. And when that happens, that tells you you have a very indecisive market with basically 2 sets of players. You can see it happen back here in the overnight. It happened a couple times in sessions. You know, there's a double D there from yesterday. Those are kind of 2 areas that everyone likes, and in the middle, nobody likes it. You know, as you can see, look how fast we move through the middle. But the mistake you can make with this, and it's a ledge, it's an edge, it's a lot of things, but the mistake you can make here is just by interpreting this too strongly. I mean, we got up here basically on news or whatever, you know, stops getting hit or shorts getting squeezed, you know, and the potential for a really massive move up here is enormous. But at the very same moment, I mean, you know, look at the action we've had. We've had, you know, this 5-minute bars. Look at this in the ES that went from what is the top of that here? Let's grab the cursor so we can see. Okay, look at this bar right here. 17 down to at 10 points in the ES on a 1 5-minute bar. And then, you know, over here, look at this one, 33 and 20. I'm sorry, but there is just nobody in their right mind that can tell you that they have a system that trades that. It just, you know, they're lying. It's just not possible. So the simple solution is to be in, okay, what's a low risk entry here? What's a low risk idea? And then once we put that idea on, our very next step is to manage the risk. And that's all we can really do. And so, you know, that's why this timing of this week is really good. I really wanted to do that session on Tuesday, and I actually tried, but I just couldn't sit long enough to talk. So, you know, that was a really fun couple of days, Monday and Tuesday. But, you know, you're kidding yourself if you think it was easy to trade just because of the volatility. It wasn't. You know, I saw a couple of people saying, at least two people said, God, you know, I was really good yesterday. I did really good on the one tick drill. I made $400. And then today I got screwed and I lost 200. You know, guess what? Welcome to trading, guys. That could be you. That could be the market. It could be, you know, you had the wrong thing to eat for dinner. You know, you really have to learn to give the entire concept a little bit of room, particularly when you're seeing, you know, this kind of energy in the markets. Let's go look at, just for fun, these are the equivolume charts. I mean, look at this. There's just, you know, if you saw that happening and, you know, you might have been able to jump into it and catch the momentum long and, you know, then ride it a little bit. But that was really the only way you could have played that. You know, now I'm sure there's a bunch of people shorting it. And, you know, until we actually open, I think trying to predict anything here is really silly. I think it's a really stupid idea. So I would strongly encourage you to forget Elliott waves, forget everything except just what is the realm of possibility. And then given that realm of possibility, what are some low risk ideas? So for example, let's grab the 30-second NQ chart. If in fact we're seeing an upthrust, which is possible, right? You know, there's a big high volume spike, and if it never gets back up there and tries to test it on a low volume bounce, that's an upthrust. It's a classic example of one. So this would be a colossal short. We could fall all the way back down to 40. Boy, that's a 31 pointer. So yeah, that was kind of the idea I went in with that short a minute ago, but I did that for a reason. I wanted you guys to look at that and say, well, wait a minute, how do you manage risk on that? You know, what if they do manage to squeeze us at the open like they often do? You know, you just wouldn't be able to get out of that trade fast enough. So let's wait for the open, take a breath. Today's a really good day to let the open 5 form unless it's just overwhelming in one direction or the other. But having said that, it's probably even more important to let the first hour high and low form. And so I need to stand up and my mic may make noise because I'm dragging the cord around, but I have to nurse my back here, guys. If I stand, it hurts less. So anyway, so again, I'm trying to make this about the first hour high and low. If we get a good setup today, I'll stay with it for the whole first hour and we'll run this webinar through it so you can see how to do it. I don't know if we're going to get that opportunity, but for now, let me just describe something about the first hour high and low for the last 5 minutes before the open. It's also called the initial balance by people that are market profile diehards. And long story, but you know, if you really want to know all the math, a guy named Stedelmeyer wrote a book about the market profile. He licensed all the math and everything to the exchange, the CME, CBOT, and basically there's a lot of depth to the market profile. There's people that trade it all different ways. As you've heard from me throughout this session, you know, the seminar classes and over, I generally use the volume profile as opposed to the market profile. Market profile being the one with all the letters on it, the TPO chart. But there's one significant exception to that, and that's the first hour high and low, because there are just so many strategies that involve it. And here's just, I'm going to give you a bunch of examples of that. Just, you know, brain dump. There's a lot of ways to trade first hour highs and lows. I have a collection of them I used to do that I don't really do anymore. But for example, there are statistics that are very accurate about if the first, let me pull a chart up here just so you can see what I'm talking about. All right, so, and be mindful we open in 3 minutes, but there's a lot of statistics about the first hour highs and lows and what happens if, for example, we test the low and go back to the high. If we break the low and then break the high, that's called a double break. And there's, again, a lot of statistics about this stuff that I won't bore you with now, other than to tell you that the first hour high and low is the ultimate weight and scale setup. So in our library of setups, our playbook, of things we do, it is the ultimate of this because it gives you lots of time, and trades tend to develop over 30 minutes many times. Sometimes they develop over the whole day. And so understanding where the first hour high and low is, and that it is also the initial balance. In other words, it's the statistical measurement of the market that a lot of old school market profile people use. So simply because of that, it can be a self-fulfilling prophecy. But if you just look at the statistics of it, you know, like those ones I mentioned, you know, if we break the low and then we head back toward the high, what are the odds we're going to break the high again? Double break days, really, really rare. But when they happen, they tend to continue very aggressively. So, you know, that's just a simple example of some of the background being useful, not tradable, but useful. Okay, we have 2 more minutes before we open. Trading plan, you know, like I've told you guys over and over, I used to spend hours preparing. Now I spend 2 minutes. I know the context. I'm not interested in oil today because of the OPEC meeting. If you watched what happened yesterday, you could really get raped on that one. And gold, there might be a trade in gold later after 7 o'clock, after the first half hour, but I'm going to lock those two down for a moment. And we'll just play the indexes here for the open. Okay, now let's see if I can get some questions. Yes, low risk idea, low risk idea. Tops are incredibly hard. Yes, they are. Scalps, yeah, that's the, all trades are scalps until they prove otherwise has been one of my mantras that saved me a fortune. So. Okay, now this is interesting. The one I had short over here would have actually been profitable now. This one wouldn't, though. The ES is actually leading. I have no preconceived notions at all about what we're going to see here once we open. Now remember, the open 5 has 2 pieces. The first thing we're considering here is the open 5A, and that's just the order flow. That's just that imbalanced part of the open 5. Remember, it's the very beginning of that. If you go to the open 5 Slack channel, I mentioned it right at the top. You could just feel those imbalances. So that's what we're talking about all the way up here. Slack, I need to upgrade Slack. It's not storing all of our messages right now. I will do that tonight. But anyway, you know what I'm talking about. It's all the way up here. There it is. Okay, oh, no. Okay. There, okay, it's that right there. And let's see what we got. Okay, see, there they're pushing shorts. This is going to tempt for a short squeeze. I'm going to just narrate like I've done before, guys. And you'll just watch me trade, and I'll try to explain what I'm thinking. Right now, I'm thinking this is a short squeeze that has a lot of potential to continue. But if it fails, I'm going to get short really fast myself. So watch the delta here. Watch the volume swings. Yeah, I like that one short. Might be early. Yeah, probably was. Okay. Okay. Oh, look at this volatility, guys. Let's, okay. And there's how you play it. Okay, boom, we're short. We got to stop. We're playing high Momo. We managed to get 2 off before that happened. Boom, okay, so we just reversed our $100 loss and we're profitable for the day. Let's have some fun. Okay, I'm just gonna trade and talk to you guys, and you could just watch and ask questions. I know you liked that before. Hopefully this will be a good day to do it. Okay, I'm seeing selling here. The attempt to short squeeze is not working. So we wanna try to sell it aggressively unless that changes. And remember, I'm trading a $500,000 account here, so I could, you know, go a lot bigger than, you know, if you're just starting, you want to be doing this with 1s or 2s or 3s. You don't want to do it. I may put on as many as 20 here. Let's see. This is a short until it proves otherwise. That's fairly clear. There's some buying in ES though, And I'm going to watch YM and RTY. And if they can break north, then this is no longer working. Okay, there's our stop in again. And see how, if this blows to the downside, we're in really good shape because we are already short. And I'm just trying to keep myself in the trade. Now we're up $37. So we're up 137 if you take that little thing I demonstrated to you before out of the equation, right at the open or right before the open. So I still like this short. I'm going to try to get short on a breakdown here, but right now it's not cooperating. Yes. All right, since it's the NQ, we'll go ahead and put one on down here, even though it's a shitty entry, just because I think the bottom's going to fall out and I want to be in the trade when it does, but I could be wrong. Let's see if we can add to it. Okay, now we got 3. And okay, we're still behind the ball here, but it's where I want it to be. I don't want that one, but I will take a bunch up here. Okay, come on, fill me. Oh gosh, it's not getting my limit orders. I'm filling with markets. Come on, baby. Okay. This is another example of I'm exaggerating both time and size because I want to show you guys just technique. So we may lose some money here. I'm not worried about that, but I think it will ultimately work. I'm short 9 from here. I want to leave myself room to add to this. I do not see this blowing up based on the tape. This is a selling tape, but I am upside down a little bit. So let's see what happens. If it moves up and stays in this range, I'm going to add to it extensively. But I'd rather see it start working first. There's oil going, who knows why. But okay, here we go. Come on, come down. Let's get this trade on the plus side, and then we'll start working it. Yeah, the order flow is kind of positive here. I might want to get out of this. They could push it. Yeah, let's start that one over if they can get it up to the top. Remember, I'm doing this purposely, guys. I want you to see just the movement. I'm not concerned with the P&L. In fact, you know what we're going to do? I want to see the change things there. So, okay, there's the selling again. Okay, come on, guys. Let's make this happen. I generally will play up for a couple of grand when I'm doing this because it's within the risk parameters of what I do. But again, this should not be what you guys try. This is attempting to show you something that I think might happen. It might not. If we don't break down, it's not going to happen. I don't see a short squeeze, but it sure is making it look like it's going to do one. Yeah, watch this spot right here, guys. This could be a long. So also, my back's hurting me a bit here, which makes it really hard to stay in this focus. Yeah. Okay, I'm going to try to scale out of this a little bit is what I'm doing and stay short. So I put a couple more on up there and I'm trying to take them back off down here. Okay, and I could get really hosed doing this, but again, in my realm, that's not hosed. So I'm showing you something. Here we go. Okay, trying to show you a technique, and I think it's going to work. If not, it'll be educational as hell. Okay, look at this price discovery, guys. It's all over the place. I normally would not suggest you trade this. This is purely for demonstration purposes. Okay, there's my stops again. Okay, let's see if this trade will finally work. Okay. Nope. My back's really hurting, guys. I'm standing up now, and my stand-up desk has not arrived. I ordered one. Oh, come on. Okay, well, we still got one short. We're still upside down a little bit profit-wise. Let's just stick that there and see if we can make this go bigger. Okay. really hoping we get a total breakdown so you can see how to do this, but it's really hard to do with a bad back and standing up on a sit-down desk. Okay. It's still a short, but getting the entry right here is going to be critical. Let's see if we can catch them up here. If we were going to get a really crazy, crushing short squeeze to the upside, we would have had it already, and it may still happen, but the energy here is suggesting to me the opposite. This just feels like it's going to break down, and so I'm trying to get myself seriously short here to take advantage of it, but it may not. It could just end up being a range day. Remember, most days are range days. So come on, there we go. Come on. With any sort of size, this loss will go away really fast. So again, this isn't for you guys to be doing this kind of aggression, but I want you to see, when you have a bigger account someday, how, being down $400 is nothing, and you're still thinking of the bigger picture here. And so this is a really fun exercise for you guys to just watch. And I'm not really concerning myself with the P&L because my back hurts too much to think about it. So, oh, good. We got that one. I'd love to get a couple more up here on a bounce. All right, we're getting them. Come on, guys. And then, I could get really hosed if we break out. I just don't see it happening. Look at the RTY and look at the YM. They're just not cooperating to make that happen. It could. Anything can happen anytime, but I still like this better as a short. I really do. In fact, I like it so much, I just added another one. I really want to get this going the other way, though, and let's see what the order flow is telling me over here. Yeah, I mean, there's buying. You can't look at the delta and really determine anything here. So, this is a little bit of a lottery ticket trade. And that's okay, again, I want to cover that a little bit after this about, having fun. A lot of you guys are just trying too hard to get good at this too quickly. When, if you give yourself some freedom, even if you were doing this in a sim, I do it in real money because it's much more educational, but I can also afford to. So, make your own judgments on that stuff. Okay, here we go. Let's scale out of this on the way down here. Oh, wow, it doesn't want to give me anything, does it? This is price discovery, guys, and I still like the bias that I have. Look, whenever I get a rainbow tape, it bounces up and it gets sold, but that will change completely if it manages to break out to new highs here. Then my entire premise is wrong, and I'll get on the sidelines and see what happens. Okay, we got another one up there. We got 10. Let's roll with 10. 10's a nice round number. And let's buy a couple of them back down there just to keep our entry at a nicer average. And we'll give this a few more minutes to see if it actually works. If it doesn't, we will go on. I have two more big topics I want to cover that I wanted to cover before the open, but thanks to Zoom, we didn't. All right, buying coming in, but then see, the selling just overwhelms it. So here's what's going to happen. If they can manage to keep the price up here and collect enough shorts, then we could see a short squeeze going into later in the session. And you'll know that's happening when all four of these indexes break to new highs, and people just can't cover fast enough. By the way, I will cover before it does that if it gets up there, because that's too risky. You never want to wait till it actually blows you out. I'd probably start covering right in here somewhere around 82 if it was aggressively moving, but it's not. Again, it's getting sold up here. So, I still think that I'll get out of this trade with some profit, but I may be very wrong. So again, the purpose here is not to be profitable. The purpose here is to show you how my head's working, even in an upside down trade. Okay, this is where I want to bail, right here. So if it blows through there and has any follow through, we're going to get flat instantly. But I don't think that's what's happening. I think it's getting sold. See? If I was really being aggressive and I didn't want you guys to see like a minus 20,000 or something, I'd probably put another 10 short on any kind of a pop here. All right, that's where we want to get out. Let's Okay, time to rethink the idea. But boy, this is really cool. You guys are getting to see what it looks like to do that. And again, this doesn't bother me at all. I don't have any concern. I can make that back in an hour if I want to. I'm trying to catch a really big trade. And that's the thing, your mind's got to be different. It's not the, good trades work right away kind of thing and you instantly get out. This is just too volatile to play that way. If you do that, you're just going to get, every trade's going to be a loser. It's too chunky. It's moving too quickly in chunks. And sometimes those are sweeps. For those of you that haven't seen a lot of sweeps, a sweep will take out 2 or 3 price levels all at once. There's one right there. Okay, so it just went from here to up here, and there was no sellers in there, so it just pushed up. Boy, this could be a really nice short later on here, but right now I don't see any way to play it. If you're long, you're going to get hosed. And if you're short, it's just, you have to put a line in the sand somewhere, and I made that at 82. So I'm not going to re-enter that unless it continues to just look really good, and it doesn't. Right now, it looks like it's a ledge breakout to the upside. So again, the moral of all this stuff is it's really important for you guys to see the action unfolding and collect information. For all of you, this type of an open would have been a sit on your hands. Maybe try to put a 1 or 2 lot short on up here or a 1 or 2 lot long down there, but otherwise, I've been watching day after day of, people having frustration, and then, then they have a good day and then they're frustrated again. And guess what? That's what the market's like, guys. And a lot of times, it'll be external events to you that will matter, like pain in my case. So, God, this just looks really bearish to me, but it's holding the top. And just by virtue of that, remember what I said about ledges? They overwhelmingly go to the direction of the trend. So there's a 99% chance this will continue to break to the upside. However, that is not a tradable edge with all-time highs, because any movement up, remember I said I'd bail at 82, and we're 1 point above that. I mean, so there was no long, there's just no trade. So let's go back to the material and just let this do what it wants to do while we talk. So again, the only way to play this stuff is to do one of 2 things. You either have to play it as momentum, like I was doing at the beginning, and that's profitable, and you just have to keep it really tight. Or if you're going to try to trade it as a weight setup, you have to give it, we have a news announcement coming that could move us around. That could be the catalyst to turn it down, by the way. It often is. But if you're going to try to trade something, like a first hour high or low, or the second part of the open 5, particularly in this volatility and these big ranges, you really have to give yourself some room. And so, moral of the story here for those of you in combines, if you're doing a $50,000 combine, 2 days of this and your combine ends. You hit the weekly loss limit. Even if you're just doing 1 lots, that's why I strongly recommend that you trade more money, so that, a day like this doesn't even impact you. This is less than 1 day's average for me. So, typically your largest loss should be no more than 2 or 3 days of trading. So I'm not even there yet. I could get this to 6,000 and still have that. So again, I'm making a point. I'm not trying to show you how to lose money. I'm trying to show you how it would be very difficult to make money in any way here. Yeah, long, you might have been able to catch a good entry, but boy, it's not really giving you a good long trade. The open 5 now, clearly, that's the low right there. That's the high. It's a long setup. The only way I really want to play this long is if we get a short squeeze and, it just starts ripping up. See, they're trying to push it right there. That's what that is. They're trying to create energy that just rips this to the upside. Okay, if that happens, there will be 2 ways to do that. One will be to go with the momentum on the way up. If it's really strong, that's what I would suggest. And then the other thing to do, which I will continue to do, because when it does actually work, it will be a great trade, is, I think there's a fade trade up here. That's why I'm showing you what I'm showing you. Now, that doesn't mean I'm right. It just means, think about it. If you get it, managing risk is really easy, and the upside is just enormous, and that's, so, but anything can happen anytime. We could go to 3,500 and, not look back, in which case, grab the momentum.
Okay, so two other things I wanted to talk about. Low risk idea, I mentioned that already. That really has to be your mantra in this kind of market. Forget price levels, use the setups, but integrate them from that perspective. Always go with the lowest risk on down within your personal ability to manage risk. Okay. Now, second thing I wanted to talk about. So remember I explained to you guys, I was trading, the NQ Sunday, and I had this 15 contract short up here, and it would have been a really sweet move. Oh, well, anyway, what do you do when that happens? And, let's turn that around and say, well, I didn't lose money. I just didn't make money. I'd actually made some, but I didn't make nearly the amount. It was a shoulda, coulda, woulda, which you don't want to do that. But so how do you deal with that? What's the best way to deal with that? And for me, I've mentioned this over and over again, it's always to go back to the process. And that's how I ended up able to conclude this, back over here on the charts. I said to myself, what was I doing wrong there? And it's really simple. And again, this is the replay, and this is the coaching myself. And, those of you that have asked me about mentoring who owe me materials, I haven't seen anything like this from you. And this is what I'm talking about, Jerry. I'm talking about the thinking. And in this kind of volatility, if I lose track of this context, I'm screwed. Because, in that drop, for example, if I wasn't mindful that the level that it turned on was exactly, an old consolidation level, and it tested the first one, failed, then it grabbed an old one back here, and whoops, I'm on the wrong screen. I forgot. Let's put this over here. So what I was talking about was this drop consolidation from this other area back here. And then before that one, there was even another one. So the point is that context would have kept you on the right side of that trade. And so I looked at that and I said, well, you know what? I would have been comfortable leaving that short on if I'd really understood, the risk and where I could have put a stop, which would have been simply above the old high there. And so I looked back to my process and I said, all right, what's a way I could do that? And it just occurred to me, I've always got those range context charts, as I call them, hidden because I really don't like to pay attention to them. And I realized, maybe having them down here in small, I made the two of these the same size as the 5 minute, for example, maybe that's a way to do it. And then I tested this all week and I really liked it. So there you go. That's how your process improvement should work. And that's how your mind should work on these kinds of events. Not, oh my God, I could have made more money. Oh my God, I could have passed step one in the combine. All of that is the completely wrong stuff to be thinking about. It's how can you improve your process and how can you make this action work for you? And, again, there's just no legitimate, anybody that's telling you, oh, I'm long here from the VWAP, oh, they're so full of shit. There is no legitimate long setup using any of those parameters. I mean, if you're using a trailing trend indicator, I suppose you could say that, but that's about it. And so, the moral of all of this stuff, showing you how to lose money and talking about these first hour highs and talking about this idea of, focusing on protecting your risk with the HMOMO stop approach and this low risk idea approach. What I'm trying to tell you guys is I expect we're going to get more and more and more and more like what we saw earlier this week. You're going to see a couple of crazy days, and then you're going to see some consolidation, then you're going to see a bunch more crazy days. And so you really have to adapt yourself and also understand how it connects to my setups and the way that I put them into my process. Somebody said something in the Slack about a new setup. It was back here somewhere. I think it was, I don't know. Somebody was talking about they thought they might have seen a new setup. I don't remember who that was. But anyway, it was really just one of our setups already blended with another one, which is the other thing I'm trying to get you guys to understand today. Despite all of our troubles, is that these things all go together. Okay, edges are often ledges as well, and they're also range trades. And depending on what the momentum's doing or where you are in the open 5, they could create a high volume reversal, or they could set up a perfect flip trade like they did on Monday morning, or they could set up a really nice first hour high-low setup. Springs and up thrusts, we need to talk about that one and this one some more, and this one. So these three we're going to talk about. I intended to do that more today, but because of the problem with Zoom, I didn't. Those are going to be what we do next. And so I want to ask you guys a question, those of you that are all here. And I will come back and answer questions and talk about the comments. But before you do that, yeah, the closing 10, that's right, that's what it was. And there is a closing trade. And if you look at my comments on it, you know, I've been trying to find a way to make that trade more mechanical. And the problem is that it's hard to do that because of all the different dynamics at the close. They are not the same dynamics as the open. So don't interpret, you know, a closing 10-minute range as being significant. It's not. It could just be one or two traders closing out. So, so that's where that was wrong. It wasn't a closing 10. But the idea of, you know, synthesizing what you know and what you've learned and coming up with new ideas is exactly what I do want you to be doing. Okay. Before I comment more on that, I just want, you know, there's a good number of you here. I think there's 20 something, 27 of us here right now. I'd really like to have everybody give me just in the text, and then I'm going to go back and read questions again. I'd like everybody to tell me, I'm going to do another session that's going to be fairly long. It's going to be about those three things I mentioned, the flips, the first hour highs and lows, and the springs. You know, Summer's finally going to get his spring session. So the question is when to do that. I like doing these morning ones on trading days. A lot of people seem to be able to attend, but that's going to be a little tough on me with keeping my back in one piece the next week or two. I can do it. I just have to try not to make them 3 hours long. What are some of the other times? I've done a Sunday morning and that was well attended. So I'm asking you guys right now with like each of you, one comment, you know, what are the 2 times you'd like to see the next session? And do it in form of like Sunday morning, Saturday morning, weekday evening, you know, and we're using my time. So weekday evening is like 7 p.m. or weekday morning. Okay, can you all do that? And then once you've all done that, it's just for me to figure out where to schedule the next session. And then we will go back and do questions. Okay, weekday early morning, any morning, Sunday opening. Okay, whenever I want. All right, keep doing that, guys, and I'll collect it up and look at it later. And we'll decide. I will be scheduling that meeting shortly. I may, you know what I might do is break it into 2 pieces, maybe a morning and an evening. On the same day. Yeah, that's not a bad idea. We could do that. We could do Sunday morning, Sunday open. The trouble with that for the European guys is it's smack down in the middle of the night. Okay. All right. I think I know what I'm going to do. All right. I'm going to go back and look at questions here and we'll talk some more. And by the way, notice how we're just not going anywhere. Remember where I bailed? It was 82 and we're right there now. So basically until this decides it's going to do something, I would totally stay out is how I would trade this. And by the way, I'm not going to show you this later, but odds are I'll catch a trade between now and the close that will get that P&L positive. If I do that, I will post the total and you can see how it came out. But again, I don't worry about that at all. It doesn't even cross my mind. Okay, let me look at some questions here. Yes, I agree, Amy. Tops are incredibly hard. Just look at the price action we've been seeing. It's really hard other than one tick drills to figure out a way to make money. And one tick drills will work okay, except for those sweeps that we're seeing, you know, where it's taken out 3 or 4 levels and, you know, that can catch you on the wrong side. So I still think we're going to get a really nice short. It might not be today. It might be Sunday or Monday, but I feel one coming. You know, it's just my spidey sense. It could be totally wrong. Or it could come at 3,500. Okay, let's see. Okay, Amy. Amy said something, I get out of good trades to avoid losing money. I had the right idea, but I chicken out. Okay, this is a very, very common mistake that rookies make. And I'm going to tell you exactly what causes that. And you're not going to like me because you need to have 150K type of top step other people's money to not do that. That's the long and short answer to that. If you're trying to trade $50,000 or $30,000 or one up, whatever you're doing, you can't afford to be flexible with your setups. And so, for example, if you look at the last session I did when I did that oil trade, and I took a small loss of a couple $100, and then even as we were talking, that trade went up and would have become really profitable. Okay, that's how you have to manage risk if you're trading a small account. And a small account is anything less than well into six figures. And again, this is not about margin. It's not about, well, I only need $500 a day for E-minis, so why do I need more than $20,000? To manage risk. That's why you need it, because a $2,200 loss will wipe you out of a $2,000 account, right? A $50,000 account, it's an account breaking loss. But a $500,000 account, it's a rounding error. Are you catching my drift here? So ultimately, down the road, as you become a professional trader, the P&L becomes less important, and the quality of the setup becomes what you're doing. And so that's why I showed you guys what I did. I wanted to show you that as long as the concept of the trade was still going, and it was, I mean, I was operating on an assumption that this was an upthrust, and it still is fulfilling that. But the execution's what's killing us, because it's not following through either direction. So there's no way to make money, even though I had the right idea. And if someone tried to get long here, you could have played it that way. Oh, I'm going to get long at the top of the open five, and you could have had a good trade. But unless you managed it perfectly in this volatility, you probably would have not done very well. And so that's, another moral of that story. Don't look at having more money as a way of making larger mistakes. That's not what I mean. Making more money allows you to look at the setups with more of a critical eye to just the setup itself, and not thinking about risk management. But remember, a low risk idea for me and for you might be two different things in terms of money, but in terms of the setup, it's the same. Okay, so what I wanted you guys to take away from that, and I was hoping it would either just be massively profitable and all you guys, because, oh, Jeff's such a genius, or it would lose money like it did, so I could show you, when you do a range, remember this session is about ranges today too. The title of this one, range setups continued. Well, here's a really good example of that. Remember what I did? I liked this short, and then I put a line in the sand. I said, above 82, 80 here. Remember, 82 was my line in the sand. I said, above that, the idea doesn't work anymore. And look at this guy sitting right there, and look at the bulge. That's the bottom of the range. And this was the range we were playing. That range no longer applies. So, it looked like that was, it was this area, no longer true. And it became no longer true as soon as people started buying 82. That's why I bailed there. Now, should I have reversed and got long? I don't see it. I still don't see a long here. Doesn't mean you couldn't make money scalping long, but just look at how it's jumping around. There's sweeps happening here. Whenever I see sweeps, I go to the sidelines. Or if I were you, I'd scale down. If you're trying to do a range, sometimes you have to scale up into those. And, so you're taking more risk. So that it's really important to define what is the range, and to define, what is your idea of risk? What is a low risk idea to you? A low risk idea to me, in the context of this volatility, remember that's always important. A low risk idea to me in the context of this volatility, guys, is there a way I can risk my daily loss limit, which for me is about $5 grand, $6 grand. That's about as far as I'll go, because that's a daily average profit times 1 or 2-ish, So I don't want to lose more than a day of momentum in my profit curve. But, the risk reward of that trade was really substantial. If this had just done what it looked like it was fixing to do back here, and just done an up thrust and just reversed, right in there, then it would have been a great trade. And you know what? You got to take risks to make money. So in these environments, a lot of times I'll do that. I'll say, all right, this is a good time to take a little lottery trade. And again, I told you I've got accounts just for that. This is actually that one, so I don't really concern myself with it. Okay, let's see. Let me look at my notes. There's a couple other things I wanted to cover. My back's really killing me. So, okay. So the emotion of Monday morning, waking up and seeing the trade that I took a small profit on could have potentially been a 6-figure profit. That's really hard to do, you know. And so what I do is I automatically turn that into how to improve my process. And so I suggest that you find a way in your own to do that too. Whether, you know, you had a bad day or, you know, whatever it is, you have to immediately turn that into, and I don't want to use the word a positive because it's not, you want to turn it into an improvement in your process. And, you know, I see there's a dozen of you that are really working processes hard in the Slack. And, you know, you've been conversing with me when I was available, and I apologize, I have not been very available this week, but that will be better next week as my back heals. But the rest of you are not spending any time on your process. Some of you started new combines and you still don't have a workable process. And I don't get it. You know, if you've learned anything from me, it's that you got to have a good process. So, you know, those of you that haven't started doing that yet, it's not just an exercise, you know, in Jeff assigning stuff to you. You know, whenever anything happens, I can go back here and find the solution. Everything I need to know about my trading business is on this sheet. And I don't think any of you are anywhere near that yet. Some of you are progressing that direction, but many of you haven't even started. And I don't get that. Here we are in process shares. I put everybody in every channel, by the way, because for some reason you guys couldn't do that yourselves. Anyway, I put everyone in here, and you know, there's been a couple of drawing ones, which is cool. I do it on napkins all the time. A couple of people have posted rough drafts, but this is the entire channel, guys. So, you know, there's 8 people here, 10 people that have even tried it. Why are you here, the rest of you? You know, what do you expect me to teach you? You know, you're not going to learn anything about the upthrust and spring setups if you haven't worked on your process, because you won't know how to integrate it into your trading. Samer, that's addressed at you. I don't see your process up there. Okay, and then, you know, this is Jeff being professor. Okay, let's see. I'm going to go back and look at some more questions here. No, works. I have a job. Okay, I understand, you know, individuals, but that doesn't explain why 40 people haven't posted a process. Okay, these are the times. Let's see. Okay, here, Trader PD. I had the same issues. Uncomfortable 30K. So exactly. Save. See what he says here? Save up for 100K. I don't think it's possible to do a top step with less than the 100K one. I don't think 50 is doable by over any length of time because of the weekly loss limit. I think any of you that are trying to do that are wasting your money. Save up until you can afford 100 or 150. And give yourself 2 or 3 months to pass it. You know, I got to do it in a month. I got to do, you know, step 1 in 5 days. I got to do step 2. Step 2 in 10 days is easy. Step 1 in 5, it just depends on what the market gives you. So instead, do step 1 in 20 and do step 2 in 20. And over 2 months, you will make it. And then you'll have a whole lot more room to make mistakes. You know, you guys are not good enough to qualify at 50 grand. You're just not. And you know, I'm not trying to ream you. I'm just trying to get you guys all realistic. You know, the longer that I don't say stuff like this, the more I see unrealistic comments in Slack. They increase exponentially between the times that I say stuff like this. So anyway, okay. Yeah, you guys have a private conversation about that on Slack. I'd love to have you exchange that information. Going to go live next week for order flow trade. Ask me that privately, Darren. You and I still need to talk. Equities are reacting to CL. Yeah, the oil thing's been going on because of the OPEC meeting, and you know, remember there's a direct correlation between oil and equities because so many S&P 500 companies profits are related to the price of oil, and that's really the bottom line. So Lee makes a very good point there. That's another reason why this is really not tradable. And, you know, OPEC could come out with some announcement and that'll be that. Oil drops to 55 and the indexes tank, and you just can't predict this. So you just got to, you know, try to set yourself up for good returns and take money out of the market when you're not getting, you know, the home runs. But every now and then it's fun to shoot for one. Okay, let me see. Next. Should you use a problem-solving worksheet? Not certain I understand, but I think everybody's process should be in some sort of printed form. There's nothing wrong with working on it with a pen and paper, but if you can't use Excel well enough, or Word, or whatever, Evernote, I mean, pick whatever you want, OneNote, you know, if you can't spend that much time working on your business plan to go out and make money as a trader, then you're totally fooling yourself that you think you're serious here. Seriously. I mean, every one of you that does not have a published process in that channel is wasting your time and mine, because you're not getting out of this what I'm teaching you. The process is totally fundamental. Nothing else matters. Yes, Samar, that is totally correct. You can't synchronize with the market if you do not have one. Okay. Let's see what we're saying about Top Step. How do you reconcile the fact that once live the drawdown parameters? Okay, Lee, in every one of the, prove you can trade and we'll give you our money prop firms, whether it's OneUp or it's Top Step or it's anybody else, they're there to make money. Okay, everybody listen real carefully. This is a really good answer to what Lee brought up. They are there to make money. Why are you there? You got to ask yourself that, okay? Lee, the answer to your question is that's not true. Okay, what Top Step will do, as any of these firms will do, is they'll give you enough rope to hang yourself as long as they're not going to lose money. So think about it for a minute. You're a venture capitalist and you have given money to Top Step. Okay, just for, let's use round numbers. I invested $100,000 and they take my $100,000 and they give it to a trader. Okay, and again, those of you thinking you're going to return, 5 or 10% a month, next year, you're dreaming. But let's just say that was true. 10% on 100 grand. It's 10 grand a month, okay? A good trader will disappear from the loss limits so quickly that all you have to do is go back to them and say, okay, here's what I want to do. And they will say yes or no. You can go back to them, Lee, and say, I want a 90-10 split. And they either take it or they say no, and you leave. That's how it works. It doesn't work any differently at OneUp. They have a clause in their agreement that's the same as what Top Steps used to say, that it is their discretion whether they fund a trader or not. But again, the bottom line here is you've got to be able to think in terms of risk management, not how many contracts you can put on with whatever amount of money they say they're giving you. So if you're thinking in terms of risk management for $100,000 or for $150,000, that's how they come up with the idea of a $3,000 loss limit for a week. Okay, because they're looking in terms of drawdowns. And I don't understand why you guys are constantly talking about how much money they are putting up. Why do you fucking care? I don't get that. All you should care about is one of three things, okay? Top Step and OneUp are there to make money. That's what they do. Ultimately, they would love to have a stable of really great traders that are split 80-20 or 90-10 or whatever it is. But in the meantime, they've got an $8 million business model that makes money on people's dreams and aspirations. And guess what? That's where most of you fall into. Most of you have not approached this as a business. You're not approaching it professionally. And if you happen to get funded, you either lose the funding a few months later because you don't have a business plan, you don't have a process. The reason that they put those risk parameters in place with Top Step is because if you follow those, once you get far enough away from the loss limits and the drawdowns, you can do whatever you want and they will do it with you because you've proven your skill. And it seems to me this is common sense, but maybe it isn't. So ask yourself, why are you there? Top Step's there to make money. They do that one of two ways. They sell subscriptions and that generates $8 million a year. And then they fund a couple of thousand people a year, and of those, a couple of dozen stay with them and are profitable over time. And those are the guys they'll work 95-5 with. You get 95. There's all kinds of deals like that out there, guys, but until you can prove you can trade over time, none of it matters. So, am I making my point? If you're at Top Step simply to get your $5,000, go open your personal account and start yourself, then get through as fast as you possibly can and, with whatever and get out with the money. But I think that's daft. I think that's really silly. And if you're at OneUp, it's the same thing. The reason that you trade other people's money, guys, is so that you don't have to think about it like it's your money. So to go through that with the idea that I'm going to do Top Step and I'm going to get the $5,000 and then I'm going to open my own account, I'm never going to look back at Top Step, you're missing the entire point. You're totally missing the point. So while the math of what you're saying, Lee, is not incorrect, that's from the point of view of how they manage their investors. If I put up my $100,000, I want to make sure that I'm not losing and I'm getting return. And they split that with their investors, and a couple of percent a month is what the average investor in something like Top Step, your trading partner, he's making a couple percent a month. And that's what they're looking to do with their funded traders. And so, you know, put that all into the context of yourself. Where do you fit in that equation? That's what you got to do. Can you bargain with them? Of course you can. You can bargain with anybody about anything, David. Yes, it's 80-20 until somebody says otherwise. Now, let me just give you a hypothetical. Let's say you're trading 80-20 with Top Step. You've got a $150,000 account and you're printing $10,000 a week in profits, okay? Consistently. Month in, month out, you're averaging 40 grand a month. Do you really think that if you go to them and say, okay, guys, you know, you're getting 20%, I'd like to offer you 10% under the same conditions. Do you really think they would say no? I mean, think about it. For the same reason, I can call up Phillips Capital and say, you know, I'm trading a couple hundred times a day, and this, you know, this $3.75 or $4.10 or whatever the current rate is nonsense. You know, give me $3 or I'll go elsewhere, and be prepared to do it. So yes, you can bargain with anybody about anything, particularly in trading. Look, we are all venture capitalists in trading. We're all putting up our money and we're trying to make extraordinary returns. That's why we're doing it. So ask yourself why you are trying to get funded. You know, if you tell me Top Step's process is too hard or they don't really give you 150 grand, you're missing the entire point. You know, you're behaving, you know, like Trump with his tweets, whining about the process. Why are you there? Are you there to make money, or are you there to whine about the process? If you don't like Top Steps, leave and go to OneUp. But guess what? Do not think that they do not exercise that clause. Look at it. It is in their terms and conditions. It says that you must trade consistently. There is absolutely no metric defining what consistently means. That is up to them. Okay? So, moral of the story on, you know, the prop firms and the funding firms and all that. So, you know, if I were you, what would my mission be? If I were most of the people in this session, I'll tell you what I would be doing. I would be trying to get the biggest account I could possibly get at Top Step in the longest time I could do it. Exact opposite of what you guys are doing. I wouldn't try to get through in a month. If I do, great, you know, but you're putting an unrealistic expectation on yourself. And they know that, and that's why they're very profitable selling subscriptions. On the other hand, if you look at it and say, okay, I'm going to take $1,000, and for the next 3 months, I'm going to trade a $150,000 combine, and my investment, oh gosh, look at this price discovery now, guys. Oh, we're just all over the place. Oh, walla, walla, walla. It's barely even keeping up. So yeah, Zoom is impacting my data feed. It normally doesn't chunk around this much, but let me close a couple of things. Anyway, okay, so I want to go back to that. That last thing I was saying, you know, so what you should do is you should say, okay, I'm going to invest $1,000 in my professional trading career. I'm going to take 3 months, $1,000, and I'm going to qualify for a $150,000 account as slow as I possibly can. I'm going to trade it like it's a $50,000 account. That way I never come near any of the loss limits. I never have a day where I get a drawdown limit. And the worst thing that ever happens is I lose like 20% of my drawdown and I come back the next day. Is this making sense to any of you? I mean, you're trying to create, you were mixing price discovery and ebb and flow, but now you know, yeah, oh, they're totally different. Now, ebb and flow is very predictable. This is price discovery. This is just like, you know, it has no rhyme or reason. It's just totally shaking it up. Yeah, look at this. You're getting sweeps. This 4-tick sweeps in NQ. When you see that, you know, just get out of the way. Do not try to trade that, because you can be right and still get hosed. And, you know, yeah, you might try to trade the range, you know, with a 1 or 2 lot, you know, on a bigger account. But anyway, all right, so let's go back to that last point, guys. Are you hearing me on this? You know, the idea is to be able to trade without regards to capital, only with regards to risk management. And if you're constantly worried about, you know, hitting your daily drawdown or whatever, you're not going to be able to do that. But if you make that number big enough that it doesn't impact your decision process, then you're going to learn how to trade like a professional, which is purely on the price action. You shouldn't care, remember I said, most good traders don't pay much attention to their P&L. Well, I watch it because I'm in business to make money, but I don't look at every trade from, oh my God, I lost $2,000. You can't think that way. You'll crush yourself. I mean, your emotions just can't handle that. You're human. So what you got to do is you got to give yourself a playground. That's a good word for it. You have to set up a playground. Make this fun. Remember, make it fun, make it balanced, make it loose, and make it mechanical. Mech. Okay, I'm showing you that. If you have a large enough account where you can test a really big trade like that, which might have had potential for $20,000, and you can afford to lose $2,000, that's 10 to 1. Yeah, I'll do that once or twice a month, no problem. That's the kind of thinking you have to have. So Amy, Jiri, Darren. I'm just randomly naming people who I've heard some of this stuff from before and hoping, hold on a second, I'm reading comments here. The point you're making is when you're live, you initially be able to trade as if you were trading the 30K or 50, otherwise. Okay, again, Lee, you're not hearing what I'm saying. Your objective in qualifying is to go from start to funded and with a buffer before you even start thinking about trading it live. Are you following me? Your purpose is to get out of the barn, and they make that really clear, but nobody pays attention to it. What they do is they think, okay, I'm funded now. And then they don't realize that the scaling program in the funded side is for the exact same reason it was in the combine, to keep you from being stupid while you build up capital in your account. And once you have a $20,000 buffer in there or a $30,000 buffer, then it doesn't matter. So, that's why, again, Lee, what I'm saying is that, yeah, I know we're saying the same thing, but we're saying it backward, different. We're saying it two different ways. You're saying it from the point of view of critiquing the metrics of the way these firms work. What I'm saying is they are there for your own fucking good. Go through the process. Take 3 months to go through Top Step. It's not how fast you get funded, it's how long you can survive. Are you hearing me, everybody? Of course, Amy, the one you did at OneUp, what was it, $30,000 or whatever? How can you possibly trade that during the day? One bad trade, you're screwed. Exactly. What you said is exactly right, Amy. And I don't get the rest of you with this mentality. So that's why I'm really pushing this point. You should not, every time you have $200 and a new setup that's working, jump in and do a combine. You're not ready. Seriously, and I have no horse in this game other than trying to get you guys all out the gate as good professionals. And so, yeah, we're saying the same thing, Lee. But I'm just saying it from the point of view of education and, not that what the firm's rules are, because I completely agree with Top Step's rules, 100%. I would make them harder. And by the way, they used to be harder. They used to have, that your average winners had to be bigger than your average losers, and your average winning day had to be bigger than your average losing days. And it used to be much tougher, and they've pared it down, as they've gotten more experienced with it. But those components are there for your own good, everybody. They really are. Okay. Oh, yeah. You know what, Philippe, that's a really good comment because I use Top Step as a development lab. I've been buying combines of various sizes for 3 or 4 years, and I've never actually tried to get funded. I actually might do it this month. I've got one running now, and I'm thinking about it. But I don't want the 80-20 split, but it's really good practice. And what I do with it, as I've said, over and over, is it's like my development lab. I treat it like it's real money. And, and if I break the rules, I have to pay for a $99 reset. That's how I find myself. So it costs me money to develop a new setup, literally real money. My credit card, I see the bills, $99. That's my way of keeping myself focused on process improvement. And, I'm trying to be really emphatic with this topic because I really want you guys to hear what I'm saying. There are the metrics and the mechanics of setups and where's your stop and da-da-da. But in the real big picture of things, it's about being comfortable. And you'll never be comfortable with a $50,000 account with the rules it has. You just won't. And again, it's not the daily loss limit that'll kill you. It's the weekly loss limits that will kill you in anything top step. And they're designed to be that way. You know, two bad losers, losing days in a 50K and you hit the weekly limit and you're screwed. That's that. So that's the reason you should be trading with those risk parameters, and you should be doing with 150 grand. That way you never come anywhere near it and you gradually improve. Okay, that's the end of Jeff's lecture. You could never make it work in the regular trading hours. Make what? Okay, Jerry, you and I need to talk offline about that one. Okay, any other questions or comments about anything? We're just about at the first hour here, and I'm going to let it form, and then I'm going to wrap this up because I am really not comfortable. So I apologize, guys, but I'm doing the best I can. My back injuries are old, and they generally are what I refer to as chronic, which basically means they're just annoying. I mean, I'm in pain most of the time, but it doesn't really impact me because I'm good at managing it. And then every now and then I have an acute event, which is what happened last week. And, you know, I just literally can't do anything other than lie flat on my back and try to rest it in ice packs and all that. So I'm past that now, but I don't want to be back there. So anywho. All right, I don't see any other questions or comments. So let's go to the first hour. All right, so here's what's gonna happen. Let's use a yes. So one of the things that I always like to do, and this is part of market profile, again, and what I'm talking about here, if you really wanna, oh, 1 second, sorry, I can't type today either. No, it's not that guy. The original book that Stettlemeier wrote, yeah, it's not that one, but it's the original of that. It's not Markets and Profile. It's the red version of this. This is like edition 3 or something. But anyway, if you can ever find that book and you're really interested in the statistics of this, there's some really interesting stuff. And I'm only pointing the, oh, that's the, yeah, this is that cover that just came up is the one that I have. It's this one. Oh wait, that's the second edition. Actually, there is a first edition too. Anyway, so he talks about the bell-shaped curves. I mean, this is literally all the statistical crap behind what we talk about with market profiles and volume profiles and blow off extreme. I talked a little bit about this. So this is like the original Bible of this kind of thinking. And one of the things that's in it, and he talks a lot about, are the time frames. And the one that we are talking about used to be called the initial balance. Now it's generally referred to more as the first hour high and low, but it's still the initial balance. And the idea here was that it's exactly the way I define the opening 5, except for the hour. And the thinking behind the statistics is really simple. You know, if you think of these as bell-shaped curves, draw a line down the middle. You know, the edges should be a couple of standard deviations away, and that should kind of control price. That's the concept of it. And the way that we've been trading open 5s and the way that the first hour highs and lows work is pretty much the same way. You know, they tend to be inflection points. And what I want you to keep an eye on for the next couple of weeks, though, as we're talking about this, is the way that open 5s transition to first hour highs and lows. Okay, let me take a step back and let you all hear that one more time. What I said was you're looking for the ways that open 5s transition to first hour highs and lows. Okay, why would I care about that? Let's think about that for a second. Again, what's the theory here? All right, the opening 5 is about those imbalances initially, and that kind of defines it. And then whether, you know, the part B, whether it comes back and tests that level and what it does, because, you know, that level got everyone's intentions for the day clear. That's how I like to look at it. The opening 5 is like the daily intentions of players in the market. Okay, so if you look at this day back here, we'll just take that one as an example. So that is what the opening 5 looked like. And so you can see we've got a pretty good, this bulge wouldn't be here yet because it didn't trade down there. But so you would see, that you wouldn't have this volume here. So you'd have a pretty good ledge and an edge, and it's the bottom of the open 5. So, could you short there? Yeah. Could you also go long looking for it to bounce? You could do either of those, and you could see some people were doing that in there. And then what happened? Okay, we lost the open 5. So immediately your bias should be, okay, now I'm really going to think short, or I'm going to think if I'm going to be long, it's going to be further down. Okay, so watch what happens. The first hour low develops, and that becomes support. Using that word loosely again, that becomes our inflection point. Notice how it is also the first hour low of the previous day, as well as a huge consolidation area from overnight. And if you look back, that was one of the consolidations on the drop. So this all makes sense here. If you, I know somebody likes me to do this. You can see, look, my line, it goes through this area, it goes right through this area. And then if I come back over here, that's the area, this is the open 5, right? So if you put it right there, okay, it's the bottoms of this range. Now, let's look, okay, here's the top and the bottom of that one. That's 07. Let's see, oh, look at that. Look where it stopped. Boom, right there. So that's where the open 5 defined itself. It's respecting prior levels, okay? So that would have been a really sweet long entry. You could see that the delta turned. We got a little bit of a high volume reversal, not really a strong one, and so from that point on, you've got a long until you get up there again, and then, okay, how does it handle it? It's sold. So you see how these two integrate. Now, the first touch there was a really nice little short opportunity, and you can see our bias here would still be clearly to the downside. The cumulative delta was negative. The delta bars were much more pronounced on the downside. So, but now watch as the rest of the day develops, how that kind of plays out though. Okay, it comes back up and it looks at that open 5 again and says, you know what, we kind of like it here. A little attempt to sell it, but it didn't get anywhere, see? And so right there, again, is why I call them inflection points. Your brain should have switched gears right there, okay? And it should be saying to itself, that short isn't a short anymore. It might not be a long, but it certainly isn't a short because it had an opportunity to get sold. It did. It had an opportunity to get sold again, and it didn't. So conditions just changed, okay? Now, watch what happens. Look at that candle. I mean, that's the trouble with our volatility. You just can't, have a conviction about anything because, this setup was perfect and it worked anyway, but boy, it sure tried to take you out of it. I mean, and if you got stopped out, don't feel bad because everybody would have. But then look what happened, it defined that level as support, quote unquote. If you're watching my trend line, it kind of held that line right there too. And then from that point forward, we had a really sweet long. So, that's why you look at these things. So going into today, it's really important given that we're getting the first hour right now. So let's see how the first 5 minutes evolves into the first hour. And I can tell you right now, it's evolving in a bullish setup because the first hour is going to be above the open 5. And that's generally bullish. And that's true. NASDAQ's doing the same thing, but not nearly as strongly. See, it's clinging to it. So remember, if you're going to get a trend, you need correlation. So if this move up is going to have any legs, we need to see all this correlation holding. The RTY is leading, which you want to see, and you want to see these guys all stuck together. So right now the weak link is NQ. It has to keep up. If it doesn't, the S&P is going to have trouble rallying. By the way, the pop in oil, that is why you're seeing the S&P lead, because there's a lot of S&P stocks that are tied to the price of oil, like oil companies, and not so true with the NASDAQ. There's very few there, so it's not benefiting from that. And by the way, guys, again, when I do this, I'm throwing a lot of different concepts at you, and you assimilate them as you see fit. This is all great stuff about the first hour high, but that little bit about oil, that's just something as an oil trader, that oil moving up is bullish for the S&P because so many S&P stocks have oil components. Yeah, just pull up the heat map, and it doesn't take long to figure that out, right? There's the S&P 100. See anything that has anything to do with oil? Yeah, of course, lots of them. S&P 500, same thing. But if you go to the NASDAQ, how many of these have any connection? You'd have a hard time finding one that does. Maybe one of the consumer products, or I don't know, but the S&P 500, it's really clear. Any of the transports, for example. So oil companies, yeah, don't have to think too hard. So that's my point here. See, now the NASDAQ started to participate. So this is looking good for the bulls. So let's go back and look at the domes and talk about that. So what you want to do here is you want to say, okay, we're right at the bottom of the first hour high, or the open 5 highs. Those are all right here. And 30, it's like 83 here, and down to about 80. What I'm doing is I'm looking at this. That's kind of that area right there. So remember, I jumped out of my short here above 82, which is now the VWAP. So pretty much anywhere up here is to be considered, a long bias, not necessarily a tradable long. But let's watch them all together. See, they're all near the tops. Again, the NASDAQ's the weakest, but if this is going to continue up, it's going to have to continue doing that, and I just don't see it doing it. So I don't know. After I wrap this webinar up, I'll probably put another short on. I might even do it right now. Okay, look at that tape. I mean, yeah, and it worked immediately, but it bounced right back out. Damn it. Okay. No, I can't get my stuff in there. I still got too short. Oh, well. I still like this. I like this so much. I'm going to add to it up there. Anyway, all right. So first hour high, opening 5 high, opening 5 low, and transitioning into the first hour. So I'm going to need a 5-minute candle here on my 5-minute chart to see that. But, see that slope right there? As long as we stay below 90, this is valid. So let's see if we can squeeze our stops in there. Oh, we don't just need to. Okay, we got it. So that's the only way to try to play this, guys. Seriously. Okay, now, this might turn out to be the big winner. Watch. And okay, you know what I'm going to do? I'm going to just make that break even stop, and I'll refill it up here, and we'll see what happens. Okay, let's see. Yoga, empty space to run. Whenever there's an all-time high, it has empty space to run to that direction. That's why it's a ledge. But remember, we've got this big air pocket underneath us from the pop-up at the beginning of this session that could fill any time. And so I'm trying to just be in the market if and when that happens. That's my objective with my big wait and see setup here. And as you can see, I'm willing to take a little risk to do it, but it has yet to work. See. So, the concept's great, but, the market, it's just telling you there's no trade here other than, if I get short higher up, I might be able to scalp, and make some money doing that. But other than that, and this is one of these, one of the times, you saw that in my process, whenever you've got gaps, and I recommend this being yours too, whenever you've got gaps or high volatility, scale down and wait for setups and move into them slowly, That's the approach you should take. And who knows? So one day you might just get lucky and catch a huge one. I've seen setups like this that I'm trying to get into here. I've seen them go from like 84, I've seen them drop 200 NASDAQ handles in a matter of an hour. And if you're in that trade, it's hard not to be elated when that kind of stuff is happening. But so many people are trying to make that happen today. It's just not happening, which means we probably have more upside. I don't know, Okay, I finally got my painting of my open 5s and my first hours here. So let's go back to that. And we'll just leave this thing running back here. So really good example. You can see this was the opening 5 here, low, and then it's high. So you can see that we have a very strong move into that. So as long as we stay between here and here, then that will continue to hold true. If it violates the lower side of this and gets into the middle, then I would expect it to test the first hour low, and that might end up being the entry for the short. So that's how you should read this kind of action. always be respectful when you have an open 5 that leads to a opening first hour that is above it. You need to respect that, but this is also a beautiful upthrust right now. I mean, as long as it doesn't take out this level, right? As long as it doesn't take that level out right there, 90, we have an upthrust, and it's a beautiful one. So, you know, I keep getting short, and I'm short now, and I'm short profitably. So, you know, and I want to add to them. You know, by the end of the day, this will be a really profitable trade, I think, guys, but who knows? Managing it and talking and being in pain, I may end up screwing it up. But I really like this short. I'm just, you know, I'd love to get a squeeze up here into 90 that gets sold. I mean, I'd probably jump in with 20 or 30 contracts on that. Anyway, all right. Any other questions? For context, does it make sense to look at the volume profile in a longer time frame? No. Well, it depends on what context. So I said no too quickly. The reason that I have my volume profile on the Renko chart as one giant one that's just set to the chart is I want to see volume. And right now what I can see is that, you know, this is a general high volume node ever since we broke to new highs out of this consolidation. And it's been really spotty and nasty ever since that. That's why I like this short so much. This just looks like a classic melt up to the short of the century. But, you know, it could be at 3,300, not here. But I just like it wherever it lands. So because of that, the only thing in the volume that is important to me is that we're in a range that is a smaller volume than the big one down here. And as long as it respects that ledge, you won't gain anything by going farther out, Steve, because you don't know what the conditions were. You know, this is the problem with backtesting. This is the problem with quote unquote old support levels. You know, we don't know what caused this sell-off this day, or, you know, or what started that, or whatever. You know, it was whatever was happening that day. So the mistake many rookies make is they just read too much into that. Oh, that was support, it's going to bounce off of that. You know, whenever I hear that bullshit, no, it doesn't bounce off of anything. Traders think it does. Sometimes it's a self-fulfilling prophecy. But other than that, you know, don't overthink those. You know, again, always look at it from what's a low risk way of playing this situation. And the low risk way to play this is one of two: scalp for ticks if you're skilled enough to do that, and in this environment it's tricky, or try to do what I'm doing here, which is to get a position on that will either work or it won't, and you know, give it a little room. And again, that's a much more advanced kind of trading than most of you are used to. And so I'm not recommending that really for any of you now, you know, with the exception of a guy like Lee or some of you that have just been around for a while. It's just, okay, let's see if we can't push this that way. See, as far as I'm concerned right now, this is a third of a position. That's how I'm thinking. So, you know, a pop up here, even you know, to 00, you know, if we made it up to 8,400, I still like that setup as long as it doesn't pull out, you know, take out that level really aggressively. And it just doesn't feel like it has the juice to do that. But it might, you know, you never know. Okay, so the last thing I really want you guys to get a sense of is how to get this synthesis of the opening 5 and the first hour. Now, what will change my opinion? If we take out the first hour high, or if we violate that 90 spot right there. It's not the high of the day, it's 90. That's where an upthrust is no longer valid. It becomes a spring if it gets through there, and it could just be wicked long. It could just go crazy up. Again, I'm not seeing that kind of energy, but that's what you want to do. You know, we've got really clear boundaries with the first hour low, which is also the open 5. So my guess, again, you know, most days are range days. This is shaping up to be a perfect range day, in which case shorting this end of it and covering the other end of it could be a really big, nice profit. But, you know, it could also end up losing some money. Remember, I said when I first started talking about range days that it's one of the most lucrative things I trade, and that's true. But I also do it in the wait and see mode, like I'm doing it now, and I put on some significant size, and I expose myself to more risk than you guys are going to be comfortable with, simply because it fits in my risk model. So, that's why I'm explaining it and showing it to you this way. I mean, I do lose money, guys, and there are days I have losers. I'd be willing to bet this isn't going to be one of them just based on this, but we'll see. Why do I think this is an upthrust? That's why. Look at that and look at that. So there's your open 5 and your first hour. We just cannot, with any energy, get anywhere near the high we made right there. If that changes, great. By the way, notice how the LRC is defining 90 as the top of the range, which is exactly what I said a minute ago, that if it blows through 90, I will consider the trade invalid. That's kind of how I learned that, but notice how I didn't look at that to say that. I was looking at the dome. But at some point, you guys will all be able to do that too. Your risk point will immediately be clear in your head. And so these kinds of trades won't scare you, and you will ultimately make money with them, once you get good at managing the entries and exits. And that's really the key. Okay. Again, see, that's a lot of people are seeing what I'm seeing up there, which means, if we do get up there and test it, we could see a head fake. But anyway, this trade may turn into a short squeeze again. The way you want to see that, if we break out of RTY, YM, if everybody breaks out and the NASDAQ goes with it, then you're going to see a short squeeze. We have yet to see that happen today. The NASDAQ's not keeping up. It's trying, but it's not. And let's go back and look at the volume again. See, this is in a nutshell what's happening. Perfect uptrend with no breaks, perfect uptrend, no breaks, perfect uptrend, no breaks. That's RTY, YMES. The NASDAQ is not participating. It's trying, it's really trying. But unless it breaks that level, I don't know, it's always the question of the direction of least resistance. And right now that could be either way. So that's how you might want to read that. Okay, any other questions? This is really long. My back hurts. I got to move on. That makes sense. Good. Okay, Steve. Yeah, it's simply because we just don't know, looking back farther, what was going on. I used to put a lot more credence in old volume profile levels, 10, 15 years ago. But Pete Davies, the Jigsaw guy, he's really the one that convinced me that that approach just doesn't make sense anymore. And it took me a good 18 months of really looking at data to agree with him. And that's why I say things like I do to you guys, when I say, this is an opinion and I will state to every person on the planet, whether you're in this group or not, if you don't agree, bring it, prove me wrong. Why do I always do that? Because if I'm right, then my thinking is clear and it's really, honed in. And if I'm wrong, some guy who's smarter than me will come along and say, well, here's why you're wrong. And Pete did that. He said, well, you know what, here's the problem with that, and it made complete sense. So I went back and I tested it. Remember, that's what I do with real money. I said, okay, how many times when we get to old support levels where we should clearly bounce, do we actually do it? And the answer was, there is no gameable way to play it. The only way to gameably play it is to look at the order flow when we get to the inflection point, and that is the only way you will know the answer. And so then I went back to Pete and I said, wow, that's right, you're right. So I stopped doing prep, my big overnight prep at that point. This is like, I don't know, 2016, 3-4 years ago. And my mindset changed completely. That was the day I really adapted to understanding order flow in this century or this decade, as opposed to the way I understood it, in the 2000s or in the 99s. Okay, questions, guys. I've been doing a lot of talking, and I don't know if any of it made sense, but any other questions? This is a really long one. We're at 7:45 here, and even with our false start getting started at the beginning, we've still been going for a couple hours. No other questions? Really? Is my question? Oh, there we go. Now, the last thing I see is Steve saying it makes sense. It's 7:39. Okay. Questions going once. Questions going twice. It's a session you will be watching again. Yeah, here's what I want you guys to take out of the session, Amy. I'm glad you kind of said that because I was kind of feeling like I needed to put an amendment on this session. Number one, my back hurts. Number two, Zoom is fucked. And, you know, whenever I start a session and I spend a half an hour trying to make it fucking work, that ruins my day basically. So a lot of the stuff I wanted to do, we haven't been able to do in this session, but I think we covered the key points. Number one, you know, look at open 5 moving into the first hour high and low, or the initial balance as it's often called. Number two, in this environment, you need to really stop getting married to levels and really just get a sense of the volatility and the flow. Oh, we're at 90 right now. Okay, perfect. So here's where I want to see the order flow, right here. Perfect example. And we might just add to this short. Yep. Yeah, but it responded. I probably should have had one sitting up there. I liked 90 to fade, and it just missed hitting it. And so now if it gets through there, then my premise is probably not good, unless it goes through and totally reverses. So yeah, I mean, look at this tape here, guys. Here's 300 getting sold right after somebody bought 300. Yes, it's anybody's guess what's going to happen. I mean, if they can keep it up here for the bulk of the session, they might be able to blow it through here going into the close. You know, with the risk here is the short squeeze. If we get one and the momentum is really strong, I would get long and go with it. Otherwise, my total inclination is to fade this. You can see why. I mean, the pushes to the downside are much more aggressive. And, you know, look at these tapes. This is just blocks and blocks of selling. And, you know, the problem with that analysis is it's not moving the price as much as we'd like to see it. You know, I'd expect to see that kind of selling move the price down, you know, down here to 81. It's not. So, you know, that would concern me. Cancel that guy. Here's 90 again. Yeah, let's bail out. We'll see if they can get a short squeeze going. Anyway, all right. So those 2 points, the point of synthesizing the setups. Don't look at any situation as any one setup. Now all of you are far enough along where you understand that a lot of these things occur simultaneously. You get, you know, you get springs with high volume reversals, and you get flips with high volume reversals, and you get up thrusts that become flips. And so the rest of our session for the next 4 weeks is going to be detailing the setups, but really understanding, integrating them together, and integrating your whole process. So those of you that don't have processes posted yet, get your asses in gear. I want to see 55 processes posted there so we can start doing it. All right, any other questions or comments? I'm going to wrap it with that. You buy when you have to sell. I buy when I have to sell. Okay, Alessandro, if that's what's happening, if you're just always on the wrong side of that's an execution problem. Okay, so notice how, you know, I'm progressively losing money here, and there's my blowout going up, and that's how I didn't get caught in it, because I had a line in the sand that I respected. Again, I'm showing you all this stuff so you guys learn how to not have a winning day all the time. I mean, my back is fucking killing me. I will not make any bones about that. So, you know, I'm stunned I haven't lost 10 grand, but I still like the setup, particularly up here. But, you know, a one lot there. Anyway, all right, that's going to be the end of the session. If you have any other questions or comments, post them. I'm going to go write a nasty letter to Zoom, and I'll talk to you guys later. I will be scheduling the next 2 sessions, and I'm going to do a Sunday morning and a weekday morning and evening is what we're going to do. It's going to break into 3 pieces. Talk to you guys later. Good trading.